We're back to the blend. For months now, there's been talk about the Fed raising interest rates. And next week, officials will have their final meeting to discuss the issue again. And that's when they could finally take action and raise those rates.
So what does that mean to you? Here to explain are two of Southern Nevada's premier retirement advisors, Abe Ashton and Nick Strobelt of Ashton Strobelt. They're commonly known as Nevada's Retirement Brothers. Great to see you again. Welcome back.
Yeah, thanks for having us back. We
you.
always like being here with you.
Oh, that's great. Now, Abe, let's start with you. Why does the government raise or lower interest rates?
Oh, great. It's like 9:30 in the morning. We're talking monetary policy, right? Domestic monetary
Hold
policy.
on your
Yes.
seats.
Okay, this is going to, everybody wake up. So we talk about monetary policy for a second when it comes to interest rates. Remember that in our country we have what's called a fiat money system, which means our money, the money that's in your wallet and your bank account, is backed only by the full faith of the government. There's no gold, there's no silver backing it. We can talk about conspiracies of Fort Knox later, right? And what's there or what's not there. But what that means is that the government and hence the Fed, they can change monetary policy in the blink of an eye by raising and lowering interest rates, and that changes the amount of money we have in our value or the currency that we have in our financial system. And so by raising or lowering interest rates, they're trying to either stimulate the economy, or if they feel like the economy is going well, they can let interest rates rise a little bit. And so that's the how and the why they do it. Now, does it always make sense? And we were talking earlier. Seems like they've been talking about raising interest rates for the last few months, and who knows if this is actually going to be the one. But a lot of wiser heads think that it is the time. I mean, I don't know.
Yeah. You know, for the last 5 years, people have been thinking that it's going to be 6 weeks away, that the next interest rate rise is going to happen, but it's been delayed over and over and over again. But this time around, it's interesting because the more and more economists believe that this next meeting in December is going to be the time when they actually do their first interest rate rise, which is going to be a big surprise for some, but I think it's going to be interesting to see if they do, what kind of ripple effects take place. And I think the Fed is going to be watching what ripple effects takes place if they do a rise in December.
See, now the me's of the world, we watch CNBC, we hear all this stuff, and we're like, what? What is a higher interest rate? What does it mean for the end user?
Yeah, that's a great question. So it really depends who you are and what stage of life you're in. If you're younger and you're just trying to get your first home, or you're trying to get a first car loan, or maybe you're trying to start a business and you're looking at what interest rate you're going to receive for those things, what happens is you're going to pay more for those loans going forward if they do an interest rate rise. But if you're in the later stage of life and you're not really borrowing anymore and you're just saving for retirement and you have a lot of savings on fixed money, it's probably not a bad thing. It's probably good for you because you get to get a better rate on your savings rates and CDs and other fixed assets such as those.
If there's a hike, how much would the hike be, do you think? Is there...
That's a great question because there's no right
0.5%?
answer. I've read many economists what they think the rise could be, but they said if they start raising interest rates in December, I've heard some economists think that it's going to be a full 1% over the entire 2016 year.
Wow.
And so just raising it over stages slowly.
Versus all at once.
Versus all at once. They don't want to shock the system. They just want to
economy.
kind of test it with a little bit in December.
Well, that could be 1/10 of a percentage point. So we're talking all this great news or all this scary news about raising interest rates. It could be 1/10 of a percentage point or 20 basis points. And in that small of a dip, who knows? But typically, when the government raises interest rates a bit, the market starts to decline a little bit. So that's, I think, where they're trying to just test the water and see how things work with this first interest rate hike.
And what's the rate at right now?
Yeah, well, the Fed funds rate is the target rate is between 0 and 0.25%. And so that's the target
like free
rate.
money, essentially.
It's pretty much free money for the Fed funds rate. And if they increase it, it'll just be a little bit above that. But anytime they increase the short-term rate, a lot of the other rates increase as well. The longer-term rates do, they follow.
Whatever the government does, you still have to have a plan for yourself when it comes to retirement. And that's where you're the experts.
Wow, she uses the term expert loosely. Right? No, we do it this is what we do every day. And it's my greatest joy. And I know, Nick, we talk about this a lot. We have a great job. We get to help people say you've done it. You can get there from here with the savings and what you've done over a lifetime. We can help you accomplish this, the income you need, the goals you want to have financially for the rest of your life. And that's very fulfilling. But it all begins with a plan, a solid plan.
Especially this time of year, because if interest rates start to rise, you have to have a plan to mitigate that risk and have a defensive plan for that scenario. And so that's why getting good advice is especially pertinent now.
Oh, yeah.
And you guys actually have a very powerful tool that you're giving away today, right?
Yeah, you put a lot of work into this new tool.
Yeah.
This is where you get to brag about it.
This is called the 5 Steps to Retirement. It's,
Okay.
it's a PDF. It's a short 7-page document, and it really outlines just the 5 steps that help people to retire. And it's very simple. It's not complicated, but it makes it easy to understand, and it makes it doable.
It's something we can email out or put in the mail for folks. It's a great way to start the new year.
7 pages is an easy read.
There you go.
Everyone can do it.
Exactly.
Take
Easy,
a-
and it's just got simple
Yeah.
lines that you fill in that help you get your whole financial situation in order.
That's perfect.
Yep.
Excellent. Well, gentlemen, it's great having you as always. Thank you so much.
Thank you.
Thank you.
Again, to get your free copy of Ashton Strobel's 5 Steps to Retirement Guide, just call the number on your screen in the next 30 minutes. Ashton Strobel is a proud sponsor of the Morning Blend and are providing the prizes for this giveaway.
Ashton Strobel, they're located on St. Rose Parkway in Henderson. And for more on Nevada's Retirement Brothers and how they can help you retire successfully, visit the website or call the number on your screen.